where the client sold the business, okay? And then they went back and that business that the buyer bought ran it into the ground completely. And it was worth, maybe 10 cents on the dollar. The seller went back with the house money that was in the Deferred Sales Trust and bought their business back for 10 cents on the dollar.
All tax
Same
deferred. All tax deferred.
All tax deferred. Yeah, all tax deferred. Bought that business back. Now they're in the process of selling that same business all over again.
Exactly.
Damn, that's awesome. I was reading Forbes, and the top Forbes wealthy people now, none of them, not any of the 10, are real estate anymore. Not one of them in the top 10. It's interesting because 20 years ago, everybody was real estate pretty much. But now most of those wealthy people are getting rid of their real estate. What does that tell you? Elon Musk just got rid of his real estate. So you're selling high and buying higher with the 1031. There's a high failure rate to a 1031. I call it the shotgun wedding, right? You got 45 days to identify and 180 days to close. And in California, in many states, you have to tell that seller that you're not going to be up for negotiation. They're the only one. So that's not a very good technique. I'm just saying, okay? And then you've got punting the depreciation. If you're out of depreciation with a 1031, okay, you have a small amount of money you got to buy up to get more depreciation to have a tax benefit. So a really big percentage of your value has gone away by doing a 1031 because you're not going to be able to shelter the income. And by the way, your income's down, okay? You got a really low cap rate and go find that up leg. Go find something at 6 or 7%. Where is it? Is it in an appreciating area? There's this whack-a-mole problem. You go for income, you don't get appreciation, okay? So that's a problem, but you still got the tenants, toilets, and trash. And then, that all is this whole cap rate problem. It's crushing down. It's down, down, down. Some cap rates are 1% and 2%. How can you operate? You're going to get into this. I mean, when I first was in this business, it would be preposterous to think there'd be negative interest rates. Guess what? There are negative interest rates. And could there be, just an idea, could there be negative cap rates in the future or really, really low cap rates? Just a thought. I don't know if it can happen, but the preposterous of having negative interest rates has happened. The preposterous idea that COVID would shut down everything is crazy. A crazy idea. But I'm just saying that you, as a business broker, as a commercial broker, you cannot have a one-trick pony. You cannot. Your trick pony is going to have a broken leg. And all things have changed with COVID. In fact, if you're a business broker, we talked to business brokers in the Northeast, and they, a few weeks ago, I don't know if they're still there, but they were standing on the ledge wondering, if you were selling restaurants, you're out of business as a business broker, okay? They're down, and their EBITDA numbers are down. How are you going to bridge that gap as a business broker when your values have plummeted because those EBITDA numbers, that income multiplier, has gone down? If that's gone down, then the sale value has gone down. What will you do to get to sale? You need a bridge. And let me just suggest to you that taxes, again, we get back to that question, you can either negotiate your own commission or the government's commission. I think you should negotiate the government's commission, and that may be that bridge that brings you closer to the sale. Because if you get an offer after you relisted it at a lower price, this is this person's life, sweat, blood, everything, having known that, and you need to be a good steward to that client. When you are, he will reward you forever. We've had examples, and I'll end with this, where the client sold the business, okay, and then they went back and that business that the buyer bought ran it into the ground completely, and it was worth maybe 10 cents on the dollar. The seller went back with the house money that was in the Deferred Sales Trust and bought their business back for 10 cents on the dollar.
All tax deferred. All tax deferred.
All tax deferred. Yeah, all tax deferred. Bought that business back. Now they're in the process of selling that same business all over again.
Exactly.
Damn, that's awesome. Okay.
That's
now,
amazing. That's transformational.
That's 3 commissions.
Yeah.
That's 3 commissions for the business broker.
Yeah.
He got the one on the sale, the one on the purchase, and now he'll get the other one. Boom. Fantastic.
It's transformational, right? It's not just transactional. Like most business professionals, they're stuck in transactional ways of doing things. Again, the blockbuster way of doing things. But when you can provide something like that, which optimal timing is transformational, or a brand new depreciation schedule, that's transformational, or getting someone a chance to get out of all of the toilets, trash, and liability, that is transformational, right? So also out of debt, is it Dave Ramsey, the debt-free scream, right? That's transformational stuff. Folks don't want debt at a certain point, or they just want to go into debt when it makes sense. But in the 1031, you got to take on equal or greater value, which often means equal or greater debt, not transformational or transactional. So hopefully you're catching all that. By the way, I want to give a deal story. We're talking a lot of ideas, and so I want to give actual deals that have closed. Again, the Deferred Sales Trust, thousands of closes over 25 years. Michael and I are closing deals very frequently. In fact, last month alone, I think it was over $400 million collectively with the estate planning team, capital gains tax solutions, and all the different partners across the U.S. So transactions are happening, and it's a big deal. But one deal that really stuck out for me, for one of my clients, Michael, was for a gentleman just in that situation. In fact, he was in a 1031 exchange, and this is pre-COVID. He sold a property for $7.6 million. And it's in Georgia. It's an apartment complex, 128 units. And he's looking around for deals, and he's going, this is 4.5%, 5% cap rates. These rents are way up. These values are way up. I know it's a seller's market. I mean, he's been doing it for 30 years. He's bought hundreds of properties. And he goes, this doesn't make any sense. And so he had heard about the Deferred Sales Trust a year prior to this. I had met with him in person, walked through everything with him. And so he had it in the back of his mind, but it still wasn't his number one. He was still, the 1031 was his number one. Until COVID-19 hit. And then everything changed. And he called me a week after everything started to crash and said, I'm with the QI company right now. I am not touching real estate for 6, 12, 24 months. I'm going into the Deferred Sales Trust right now. And the Deferred Sales Trust deferred $1.1 million in tax. Plus, he paid off all of his debt. And that's transformational because he parked his funds all tax deferred, ready to go, ready to pounce when the deals make sense, okay? And that's beautiful for him. He's also, he's a baby boomer. He's getting older. And he also doesn't necessarily want lifestyle. He's going, I don't necessarily want to do all of the management and then headaches and evictions and anything else that's associated with it. And so for him, he's very happy. He's a client of mine. His name is Dave. And you can go to Capital Gains Tax Solutions and hear his story, capitalgainstaxsolutions.com. And the second one was for a partnership that was selling an apartment complex that I sold for them in Sacramento. We sold it for $270,000 a unit, and they were looking at a 1031. They thought they wanted to trade these units and triple their units, but then they looked at all the debt and they looked at the cap rate and they go, it's just too small. And they go, I don't know if this makes any sense. Plus, the partnership, one had a death in the family, and so this one he had to take his money and go for the family thing and left the other one out to dry. He didn't have enough of a down payment, so they're stuck between a rock and a hard place, and the cap rates aren't making sense. And this is actually pre-COVID. This is in December of 2019. And he goes, okay, I'm going to use the Deferred Sales Trust. So he used it. And now how happy is he? He's really happy, right? He's going, oh my gosh, like March hit, and the Fed and the economy was in January, February, everyone said all signs look like it's going great. No one was prepared for what happened with COVID-19. And so now he's out of debt, he's tax deferred, he's on the sidelines, and he couldn't be happier, right? So these are the actual deals that are closing that we can share with you.